Hi friends, welcome to today's video. In this video, I'm going to explain you the different chat patterns. Basically, chat patterns comes in different forms like reversal chat patterns and continuous chat patterns and neutral chat patterns. So let's focus on reversal chat patterns today. As the name suggests, it gives you the reversal trend. So let's get started with the most popular and the reliable and easy to spot couple of reversal patterns on the chart. So going with today you're going to learn about head and shoulder, inverted head and shoulder, double top, double bottom, rounding top and rounding bottom. So these are the most popular reversal patterns. So let's get started with each one of it, and let's understand as to what is all the chat pattern about, and also we'll look at couple of examples on the chart. How do you how do you look at the charts when these chat patterns are formed? So it would be easy for you to take it on the trades once you see the patterns. Okay, so let's get started with the video. The first one we are talking about is head and shoulder. So head and shoulder, as the name suggests, you can find this looks like a shoulder, the head, and this is one more shoulder. And this pattern is formed basically after the long bull trend, after the price is moved up and the price rises to the peak and then subsequently declines, and then again it forms a peak and again it comes down, and when it forms the third peak it will be to the extent of the left shoulder and then it drops back, and this line which is formed at the bottom, you can see here, this is a bearish reversal pattern. As when I say it is bearish reversal pattern, it is formed on the top, as I said, after the price has moved up to a peak. Okay, after the uptrend on the top you can find this sort of formation, and this is formed with three peaks. So it is one, first peak is called left shoulder, second peak is called head, and the third peak is called shoulder. When you are joining a horizontal line on the bottom of the left and the right shoulder, so this is called the neckline. Okay, this is very important. So you should know how to draw a neckline. Based on this only you will be able to take your trades, okay, the entry of your trades. And in this formation, the entry, that is the short position, you can take your short positions once the price breaks this neckline, and then it can give a pullback sometime or it might not. But if it gives a pullback to the extent of the neckline, and after that you can find the price moving down. So this is a bearish reversal pattern, and this is formed on the top of the chart, and it forms with three peaks: left shoulder, head and right shoulder. The entry can be taken after you get a confirmation once the price breaks the neckline, and you can see the target. So if you are taking any short positions at this, so your stop loss, you can place your stop loss at this level, that is the high of the right shoulder. You can place a stop loss. And what would be the target? Usually it gives you a target of the difference between the neckline and the head. So you can find this difference, you can also find here. So your target would be here. So this is one of the most popular and easy to spot chart pattern. So hope you understood this. Sometimes what happens after this formation, it might take a reversal. So this is not a right pattern then. So it has to break the neckline, only then this chart pattern is confirmed. Okay, so hope you understood what is head and shoulder pattern. So going forward to the next, no, let's see one of the example on the chart for a head and shoulder pattern. Okay, you can find after the price moved up, it formed, after the peak it formed this and this and this. You can see that this is the neckline. So you're drawing the bottom of the left and the right shoulder. So you will draw a neckline to it. After you can see the price breakdown, you can see how the stock is moved down. Okay, so this, in this, if you are taking a short position at this level, you can keep a stop loss at this and you can wait for the target. So the target would be the difference of this. So this is how you can spot head and shoulder on the charts. Okay, and one more thing, if you're taking any short positions, usually once the breakdown, if the price breaks this neckline, you will also check out the volumes, because the volumes also support. So if the volumes are not that good, you might not get that this thing. So if the chart pattern is considered to be more reliable, if there is a increase in the volume at this, when the price breaks the neckline. Hope you understood what is head and shoulders. Okay, so head and shoulders is somewhere like this, is formed on the top of the once the price is moved up, you can find a pattern like this, and once the breakdown happens, you can see how how good the target is. Okay, going forward, we will understand what is, inverted head and shoulder pattern is just opposite of a head and shoulder pattern. So this is formed at the bottom, and this, when it is formed at the bottom, it is said to be a bullish trend reversal. Means to say, once the price declines, it just moves up, and then again it gives you a second peak at the bottom, and then moves, and then you can find 3 peaks. So one is the left shoulder, the second peak is the head, and the third peak is the right shoulder. And here you will draw a neckline, and once the price breaks the neckline, you can see the price moving up after it. So this is a reversal pattern. Once the price breaks down, you find this pattern at the bottom, you can take a long position after the price breaking at this level. And what stop loss you will keep? You will keep the stop loss of right shoulder bottom, the low of this, and the target again would be the difference between the neckline and the head. So that would be the target here. So let's see one of the examples for this inverted head and shoulder. You can find here the price dropping, and it again moved up, then broke, and then again it went up, it broke, and after that you can find it's a good candle break. And you will also watch the volume at the this particular level, and after that you can see the stock moving up. So your stop loss would be at this level, this candle ka low, and the target would be the difference between the neckline and the head. So this is how you can spot a inverted head and shoulder pattern. And very important is you need to know how to draw the neckline, because this is very important for the entry. So you should know, you will always have to draw the horizontal line from the left shoulder bottom in this left shoulder high to right shoulder high. So that is how you will draw the neckline. And once after that the price breaks, you can take a long position keeping a stop loss of this. Okay. Going forward, we will see the next chart pattern. So the next one is a double top. Basically, as the name suggests, this particular chart pattern is a bearish reversal pattern. Mean to say, it is formed after a long, after a long bull run, bull trend in the price raises to the top, and then again it declines to form a bottom, and again it raises to the extent of the first raise, the first top which is made, it also raises to that extent, and it will not break that. Again it gives you a pullback in the stock. This is called a double top. You can find one top and the second top. You can also find a third top also, that becomes a triple top. Okay, here I'm just showing you a double top pattern here. So after the price declines here, you will just draw a neckline. That is, you will draw the neckline, a horizontal line is drawn between the bottom of the two tops. So you will draw the neckline, and once the price breaks here on the neckline, you will take a short position. So you can enter a short position and you can wait for the target. What would be the target? The target would be the difference between this, the neckline, and this top, and the stop loss will be, if there is a pullback, you can just find out, you can take the stop loss of the pullback here, and you can take a short position here. So this is how a double top would reflect. So it basically is a bearish reversal chart pattern which is formed on the uptrend after the price subsequently moved up to make a top and then declines back and makes another top, and it will not hold that and it will drop. So this is how a double top would reflect like. So let's see on the chart for a better understanding. You can find after the price moved up, you can find it made a first top here and then it declined. It made a second top and declined. You can find a neckline drawn here. You can see the price broke at this level. You can also, and after that it just gave a pullback again, and then it took a second pullback again, and then you can see it moved down. So this is how a double top would reflect like. Basically a double top would reflect like a letter M. You can see it just looks like a letter M. So it is easy to spot. It just moved up, come down, and this. So it looks like a letter M. So that is a double top. Okay, going forward, we'll see a double bottom. How does it look, and understand with an example. So the next chart pattern is double bottom. So this is formed at the bottom basically after a long bearish trend. Means to say after the price declines and it forms a bottom here, and then it just make an up move, and then it comes back and forms a consecutive bottom again, and then it moves again, and maybe it takes a consolidation level at this. You can draw a neckline, that is the top of the two bottoms. So that would be the neckline here. So you can take a long entry after the price breaks this neckline, and again you can keep a stop loss at this consolidation level, the low of the consolidation level, and you can wait for the target between these two. So this will be the target on the upside. So this is how a double bottom. So this is again a bullish reversal pattern, and it is formed at the bottom of the charts. So if you see, a double top would reflect as a W sort of, you can find a letter W sort. So this is how it would reflect. Okay, where the top double top reflects just like a M. So this is a double top, and the double bottom would be like a W. So this is how the double top, double bottom would reflect like. So let's see on the charts for a better understanding. You can find after the Nifty moved down, it made a first bottom and then a second bottom. You can find a double top is formed here and here, and a neckline is drawn, and after the price breaks through, you can find it just gave a pullback again, and then you can see how the price the market just moved up. So this is how a double bottom would reflect like. So going forward, the next trend pattern is a rounding bottom. As the name suggests, this is also again a bullish reversal pattern, and this is formed after the downtrend. You can it's more of a consolidation level. Okay, so the price moves between this levels and it forms a sort of U sort of bottom here, and you will draw the neckline. You can just find it on the charts, it's easy to find as well. And once you can find the price breaking this neckline, you can see a uptrend in the stock. So this is how a rounding bottom would reflect. So you will draw the horizontal line between the top bearish and the bullish sides of the rounding patterns. Okay, you will find a bearish one, the top one, and the bullish one. You will draw a neckline at this, and once the price breaks this neckline, you will go long on the this thing. And this particular chart pattern, it is always better to use it on a weekly or a monthly chart. It gives you a good clarity when this particular chart pattern is formed on this time frames. Okay, so let's understand in the charts how does a rounding bottom would reflect. You can find after the price declined, you can find there's a lot of consolidation happening here, a form of U, and once the price breaks this level, you can find there is a pullback. After it went up, it gave a pullback again to the neckline, and then it moved up. So this is how a rounding bottom would reflect. Okay, this is again a bullish reversal pattern. So one can go long at this level, and you can keep a stop loss at the bottom of this. Okay, and wait for it. The next and the last chart pattern is rounding top. This is again a bearish reversal pattern, and this is formed on the top of the uptrend, and after a long period of consolidation happening, it gives you a breakdown where one can go short. So basically this pattern is said to be complete only when it breaks the neckline on the bottom side. So any pattern of reversal has to give you a break on the neckline, and then you can wait for if you're very consecutive and you want to get a confirmation, you can wait, and once there is a pullback and then a drop, you can either take an entry at this, or you can take an entry here, and you can wait for a stop loss at this level. So basically this is how you can take a short positions on the rounding top. And this again is better, you find a better this pattern on a weekly, on a monthly chart. Again, this is again a bearish reversal pattern, and once the breaks from the upside on the neckline, you can wait for the short positions here. Okay, let's see an example for this on the chart. You can see after the price subsequently moved up, you can find a sort of consolidation happening at this level, a sort of rounding top here, and this is the neckline. You can find the neckline because this is the first bearish this thing, and after that you can find here. So after the price broke this neckline, you can find the stock moving down. So this is an example for a rounding top. Hope this video was helpful. If you're new to our channel, please do subscribe, or if there's any chart pattern or anything you want to learn, just give us a comment so that we can come up with a new video on it. And please do share with your friends, whoever needs it and who wants to learn more of technical analysis. And also I've given, if you're very new to the stock market and you want to open a Demat account, I've given a description, a link in the description for ICICI Direct. You can open the account as well. And I will also mention what benefit do you get opening an account with ICICI Direct as well. So just check the link in the description. Thank you so much. Happy trading, guys.